Alright, welcome to this video. In this lesson, we're going to be looking at the market sentiment and volatility. Alright, so first of all, I will define what is sentiment. When we talk about sentiment, we're talking about the position that traders have taken all over the world, the whole world, in a particular currency pair. Alright, so we're talking about how many traders are going to buy that currency pair, how many traders are going to sell it, or how many people have taken a position to buy the currency, how many people are taking a position to sell the currency. Or you can say sentiment is the trader's idea of the market, people's idea. What are people saying about the market? What are people doing? How many people are for buying and how many people are for selling? This will help you to take a proper trading decision, because you don't want to be alone and in the market. You need to know what people are doing and then do what they do, because the market cannot be fully predicted except by confluences. And one of the confluences before we take any trade is sentimental analysis. So there are a lot of websites that do sentiment analysis, but for me as a trader and as a person, I have my own websites I use for my analysis. So this video is very, very important. It's more or less a fundamental analysis, because we'll be looking at some websites. So first of all, the website is dailyfs.com. You can see it here, dailyfs.com/sentiment. Alright, so once you go to the website, you go to trading strategies, you go to sentiment. Once you click on sentiment, this place will appear here. Alright, so this is the website, IG client sentiment. Now this data was gotten from the brokers. Remember, the brokers are the ones that offer the spread for people to trade. So people take positions in the market. The big banks, the hedgers, they take big positions in the market. So they are giving you a view of what the banks are intending to do in a particular currency pair. Alright, so let's go into it now. So sentiment, so we'll look at it here. For example, the Euro USD, the signal is showing bearish, which means sell. Remember, the bearish market means sell. The net long, meaning people are going for buying opportunities in the market. In this market are only 28%. While people are going for selling opportunities are a whooping 72%, meaning there are more people wanting to take sell positions on this currency pair than to sell it. Now we'll go back to the chart. Let's look at the chart, and then let's go to our daily time frame, and then let's look at what is happening here that we talked about. Now I told us that the market is in a push phase, and the market will have to come back to at least 50% of this previous move, which is somewhere around here. Alright, which is okay, market will be coming here, and then we'll be looking to take a long position. So the market should come here. So right now, what do you see the market do? The market is coming back down here right now, so that we can form a trend to the upside. The market is coming back down, so many people are on the sell position that the market is going to come back down. Alright, so this is another thing you can do. We call this counter trend trading. The counter trend trading means that you can actually take a sell position in a buy market, provided the price is at the highest point. Alright, so what is the highest point? Is here, because the market moved, created a higher high, higher low, higher high. We anticipate a higher low before the higher high. So at the point of the market creating, moving, creating the structure, this becomes a higher high. What's the next thing that we expect after the higher high? We expect a higher low, and a higher low has to be formed to the downside, because the market moves creating this structure all the time. So it has to pull back to create a higher low before it continues. Alright, so we can say clearly that the sentiment is correct. So what are we trying to do? We're trying to build confluence. We're trying to have reasons why we should take a position in the market. That's why I told you, you don't buy in a push phase. You wait for the market to come back to a low point. We sell high and we buy low. We sell high, we buy low. Don't ever forget this. If you'll be profitable in this business, you have to understand this. So sentiment analysis is a good one. It will help you to know what other traders are doing or they want to do, so that you do exactly the same thing and then you see results. Not that people are going to sell the market, you are buying the market. No, you are going to be at a loss. Because majorly all these people are people that have done their own analysis and then they have come up with the idea that the market is going to sell or buy at a point. So kudos to dailyfs.com. Good one from them. They help us with the sentiment analysis of people. Although they have a link to the brokers, so there's a way they link these informations and then they're able to expose it to forex traders worldwide to help you in taking a better decision to trade. So our sentiment here with our structure of the market, overall structure and behavior of the market is correct. So right now what we're looking for is for the market to sell down to this point and then we'll take a buy order. Alright, so now let me digress a little bit. On doing so, now look at the currency we're trading, Euro USD. We see the currency on the right side, if it is stronger, it pulls the one on the left. If the currency on the left is stronger, it pulls the one on the left, on the right. So right now, the euro has been strong, but now it's weak. So the USD is stronger than the euro, and then the market is going to push to the downside. So these are all confluences you build in order to take a trade. And then I showed us the website where we can actually get the strength of each of the currency we are trading. I told you there are FinViz. FinViz is a good place where you can actually get, the strength of the currencies. That can also serve as a confluence for you. Alright, it can also serve as a confluence for you. Let's go to Forest. Let's see. Scale down. Alright, now look here. The USD is stronger than the euro. USD is plus, the euro is minus. So with this and with what we have on our technical analysis from the price action, that the market is supposed to create a low point, and then from our sentiment analysis that traders are going short, boom, it's a sell market. So what do? We go for the sell. I'm telling you, you go for the sell. Alright, and you'll be heading to take profit at the low point, which we'll explain in our next video. Take profit levels and all of those stuff. So that is sentiment. Now there are a lot of other pairs here. A lot of other pairs. These are sentiments on them. So this is how you draw confluence to your trading. Alright, we talk about trading bias. This is one other way too you can do that. So sentiment analysis is a good way to know what other traders are doing or the positions they are taking in the market, and then you can do same thing alongside with them. Very, very important. Don't joke with it. So look at the other pairs here. Like I said, in trading, you must not trade all the currencies at the same time. take one or two. Take only one or two. As a beginner, take only one or two and follow it clearly. Alright? Take one or two and study it, how they move, what is the trend, and then you can be able to trade it well. Don't start trading all currencies. Take only one or two. Alright? It is very, very important. So this is for the sentiment analysis. Now let's go to how we can actually spot volatility. Now I'll show you a website. It's called forexmarkethours.com. Alright? All of these things are advanced because now you can't get this just like that. It is very important to understand this. Now, in the first hours, we're looking at the trading time because, like we said, there are some currency pairs that move at a particular time. In our beginners videos, I explained this point clearly. There are some currency pairs that move at a particular time. You need to know when the currency is moving and when it's not ready to move. So first of all, let's change. In this website, it's forexhours.com. You go to the Forex Market Hours and you are here. You see the live market hours monitor. So you go here and let's change it to our West African time because we're in Africa. I think it's +1. Let's go to +1, +1, +1, +1, +1. We get Lagos +1. Lagos, can we get Lagos +1? Africa. Let me see GLT +1 Africa. Let me see. Okay, Lagos. Alright, here we go. Okay. Alright, fine. We are in the African time. So this is what you got to do. You just set this place, and then you come to another website I'm going to show you right now. These two websites goes hand in hand because you'll be using the time frame, the time to spot the volatility. Now, in our beginner videos, we explain volatility as the rapid movement in price. Rapid movement in price. Once price start moving rapidly, we know that the market is heading somewhere, and you should be trading at that point in time where the market is volatile, because that is where the money is, so that you don't get stuck in one place for long. It is very, very important that you understand market volatility time. Every currency pair has a time it is volatile. You must know it. So the website is mataf.net. Alright, so when you go to mataf.net, this is what you see, and then you go to trading tools. Okay, so click on trading tools, and then sorry for this ad. Alright, so this will show up. You go to forex volatility, and click. Alright, there you go. Okay. Alright, so this is forex volatility. It's a calculation of how price have been moving in different pairs per time, and volatility happens in days and in times. For example, some currency move by 12 o'clock, some currency move by 1 p.m, some currency move by 2 p.m, depending on the trading hours. Remember, forget this, the trading hours, and then the trading time as well. That's what I said. So for example, we're looking at the Euro USD. Now you can calculate volatility from 10 weeks, from 20 weeks, depends, but the major time you should calculate is 10 weeks. Just put 10 weeks for volatility calculation. 10 weeks of price action for the past 10 weeks. What has been the time the market, this social market is moving? So for example, we're in the Euro USD. Let's look for Euro USD in the list. Let's see if we can get Euro USD. Alright, there we go. So click on Euro USD from the list. It will start loading. Alright, so this is what you have. Now you come over here, Euro USD. It is showing you the highest peak at which it moves. It moves at 16 o'clock. Volatility kicks in 9 o'clock. Start 8 o'clock, 9 o'clock. You see volatility. 10 o'clock, the market moves rapidly. 13 o'clock, the market moves. That's 1 p.m. market moves rapidly. 14, 15, 16. So look at from 11 p.m. Let's say 11 p.m. or let's say from 9 o'clock. So let's go to forest hours and see. From 9 o'clock, which is the London session. Which is what? The London session. 9 o'clock is the London session. Euro USD moves rapidly. But the highest point it moves is at 16 o'clock. So let's look at 16 o'clock. 16 o'clock, this is 1, 2, 3, 4 p.m. which is the London session stroke New York session, which is the last session of the day. 4 p.m. the market moves rapidly. So you should be looking to trade at this time. Alright? You should be looking to take a trade at this time. And then let's look at what happens. Which day of the week the market moves rapidly, same like that. Alright, so okay, still loading. But then, okay, this is already weekend, market has closed. So we can't really see the days here. But I guess I think they move more on Wednesdays. Wednesday. Alright? They move more on Wednesday. Now, listen to this. The market has a circle. And that circle is always completed 3 trading days. Alright? So the market moves up the first 3 days and then reverses the last 3 days. This is very important. So for Euro USD, the volatility is more on a Wednesday and it is at 16 o'clock, which is 4 p.m. Although volatility starts by 9 a.m. So this is how you check for volatility of a currency pair. Very, very important. And then be looking to trade at that time. So you go to the chart at that time, look for your setup already, and at that time enter your sell position, and then you take the trade down. Alright? So I've shown you how to get the sentiment, and then how to look for the forest hours to know the trading time, and then look for the volatility of the currency pair. There are so many currency pairs here. Once you click on them, they will show you the trading time and then the day of the week they move the most. These are the two important things you need to know: the trading time and the day of the week they move the most. So you should be looking to trade on that day of the week and then at that particular time that the market moves the most. So with this understanding, you will be able to trade clearly. You'll be able to trade profitably. This is very, very important. You'll be able to trade profitably. Alright? And then you'll be able to know that market has a cycle of price movement that helps you to now know where the price is going to go next. Alright? So looking forward to next week on the Euro USD pair. We are looking for sales only. We're looking for sales because the structure says so. Our sentiment says so. And then the next thing we'll look at is to look at our forest hours and then look at the volatility, the time of the day, the currency is volatile, ready to move, the time of the day the currency moves the most. So if you look at the trade at that time, the currency moves the most, because that's when the banks trade, that's when the hedgers trade. Alright, so we're looking to trade at that time and then taking our trades in line with the direction of the overall trend of the market, the day of the week, particular day of the week they move the most, and then we will be taking our trade and booking maximum profits. Alright? Alright, on correlation, I want to teach you what is correlation. Now, correlation simply means that there are some currency pairs that move in the same direction, and there's some currency pairs that move in opposite direction. There are currencies that have the same movement with others, and some are opposite to others. So there is positive correlation and there is negative correlation. Now, if you want to check for correlation, there's a website to do that, which is fsstreet.com/technical-analysis/intermarket/correlation. Don't forget this. Every forex trader you know knows this website and he knows what is correlation. If you don't understand correlation, you might be trading against the market and you might not know it. So it is very, very important you understand correlation. Right now we see the correlation table here of all the currency pairs, and then we'll take our decision on which pairs to trade. So looking at this chart, we see Euro USD here. Now on this side you see the 15 minutes time frame, the 1 hour, the 4 hour, the daily, and the weekly. You can choose any of the time frame to know which is more correlated than the other. Now for this example, this is Euro USD, you see GBP USD, you see this is the positive correlation. Now if you look here, you see the minus sign, to this side the minus, to this side the plus. So if the currency is increasing to this side, meaning it is positively correlated to this one, meaning if this Euro USD is moving to the south, this currency is also moving to the south. If this currency is moving to the up, is buying, then this GBP USD is buying. Then your major thing you should look for is the positive correlation, the highest positive correlation and the highest negative. Alright, so it's good you understand this, because you don't have to want to be trading Euro USD on a buy and then taking GBP USD on a sell. It's not going to work, because both of them move in the same direction. The same way with the USD CHF is moving opposite the GBP USD. So if we say GBP USD and Euro USD are positively correlated, it means they move in the same direction. And if we say Euro USD and USD CHF are negatively correlated, it means they move in opposite direction. The same thing with this pair here, you see it here, and then with this pair here. So when you are trading a particular currency, you should know its correlation, and then you should know how to trade it perfectly. So don't forget this website and don't forget this correlation. So let me go back to the chart and let me show you exactly what this correlation. Alright, so let's go back to the chart. Now we are on trading view. You can see now this is GBP USD we talked about, and we said both GBP USD and Euro USD, they are positively correlated, meaning if one is going up, the other one is still going up. Alright, so let's look at what is happening now. This is Euro GBP USD. We can see the price is forming higher highs and higher lows to the upside. And let's look at Euro USD. The same thing is forming higher highs and higher lows to the upside. Alright, so they are moving in the same direction. This is correlation, very, very important. Now we say, so we say that the USD CHF is negatively correlated to the Euro USD. So you can see the USD CHF is negatively correlated to the Euro USD, and because of that you see the trend is down, forming lower highs and lower, just like they showed us in the correlation table. Alright, is negatively correlated to the GBP USD and to the Euro USD. The same thing here, you can see that the Euro CHF, the trend is down, the Euro USD, the trend is up, which means these two pairs are negatively correlated, and also GBP USD and USD CHF, they are negatively correlated. One is up, one is down. Alright, and then GBP USD and Euro USD, they are positively correlated. So either a currency pair is positively correlated or negatively correlated. You need to know the correlation of the currency pairs you are trading. For example, you are taking more than 2-3 currency pairs. Check to know the correlations. Very, very important. This is how successful traders, they trade and they make money in the forex market. So that is for correlation. Alright, so with this we end this video. Please go back and back test this. Go and look at the website I showed you, and then do your own analysis, and then you will know more on this. But this is very important. Alright, study to know the correlation of the currency pair you are trading. It's either it is positive or it is negative. Alright, thank you very much. Alright, so you need to know the correlation of the currency pairs you are trading. Like we showed here, GBP USD and the Euro CHF, they are negatively correlated. Alright, so if we go over to the chart, you see that GBP USD, the trend is up, but the Euro USD CHF, the trend is down. making lower lows and lower highs. This to tell you that these two currency pairs are negatively correlated. Okay, so it has to be either positive correlation or negative correlation. So in case you are trading and you are taking more than 1, 2, 3 currency pairs, make sure you check for the correlation. I've given you the website. You check all of these things and then you can become a profitable trader. This is how professional traders trade. You need to know the currency pairs you are trading. Alright, so that does it for correlation. Thank you.